Hi everyone, welcome to the first episode of Aspire with Alice, where we have conversations with women from women in finance, women from women in investing. Our first guest is Kruti Chetta. Kruti is a fixed income fund manager at Mirae AMC in Mumbai. Post completing her MBA from University of Mumbai, she began her career in fixed income markets and she quickly built her expertise in analyzing impact of macroeconomic data on securities performance, portfolio analysis, and also writing research reports. Welcome, Kruti. First of all, happy Women's Day and thank you for doing this.
Thank you, Sneha. Thank you for having me, and happy Women's Day to you and all the lovely women out there.
Right. So, Kruti, I want to quickly start with understanding, what your day looks like at a mutual fund. There's a lot of conversations around what mutual funds do. There's a lot of misinformation also around how mutual funds run. So, if we can just get a quick understanding in simple terms, what a mutual fund house does and how it operates and what your day looks like.
So, since we are in mutual fund and our whole time job is investing and we are reporting day to day, there's a lot of emphasis which is being given into the markets, and markets is not just domestic, it is global. So, at any point of time, we are always tracking what is happening in the global markets. Now, understand that along with markets, we also have a regulator because we have a big responsibility of investors' money. It is not our money, it is investors money. So there's a lot of regulation that comes in with every move that we make. So along with maximizing the risk reward for the investors, we are always very cognizant of the compliance also while undertaking every move that we are going to take. So the whole day at a mutual fund for any individual, I would say, not just for the fund manager, is for fund manager, markets are additional, but risk and compliance remains at the top of everything during operation of a mutual fund from day to day.
Right, right.
So that's how it looks like.
Right. So, for our listeners, a mutual fund typically pools money from various investors and it invests across various mutual, asset classes like equities, debt, or combination of both. So, fund managers like Kruti, their everyday, like she described, goes in like managing that large amount of money. So, Kruti, thanks for sharing that with us. We want to also understand that mutual funds invest in equity, debt, and a mix of asset classes, right? So how do you determine this right kind of a balance for a particular fund? Like you rightly said that there's a lot of regulations, so if there's an equity fund you do the balancing accordingly, but if you can just give us a little breakup on different asset classes and how a mutual fund manager describes them.
So if you're asking as a fund manager that how the balance is there, regulators have already done a beautiful job of breaking down all the categories. So equity in itself has around 10 categories, and debt on the debt segment has 16 categories. So an investor, while investing into any of the asset classes, clear that this is within what the investment is going to happen. So if an investor is more conservative on the equity side, they can choose only large cap. If they are more risk bearing, they can choose only small cap. If they want a mix, they can choose multi cap. And similarly, on the debt side, also the categorization is from up to 1 year, 1 to 3 year, three to like a 5 year, and so on, so forth. So the categorizations are already made for the investor. Within that, as a fund manager, how do I operate? So I can speak for fixed income, right? So for fixed income, if I am handling, let's say, a mid of the curve or a 3 or a 5 year segment, my bandwidth is either my fund can be in 3 year or it can be in a 5 year. As a fund manager, my perspective that where I think the interest rates are going to head, I can tweak within that range. But as an investor, you know that it will be within that bound. And as a fund manager, it is my responsibility that the category that you are investing in, I have to give the best return accordingly. So there are very set boundaries in beautiful way laid out by the regulators, where investors interests are protected in what they're investing, and fund managers at the same time can create alpha for them.
Right. Because, yeah, so in the Indian market, I guess the regulators have already done a job of, like, categorization. True. So if we
Right.
can also quickly, Kriti, understand like the difference between equity funds, debt funds, and hybrid funds, it would be wonderful.
Equity fund is primarily investing in the equity markets. So let's take a small example to understand it, that you have a friend, right? And he or she is starting off as a business. The friend needs some of the capital. Now, the way to approach it, that your friend will say कि यार पैसा दे दे मुझे थोड़ा, एंड हम साथ में चालू करते हैं. तू शायद एक्टिव ना हो लेकिन तेरा इतना शेयर रहेगा, जैसे बिजनेस बढ़ेगा. दैट इज कि तुमने इक्विटी में पार्टिसिपेट किया है, ओनरशिप है वहां पे. पर सिमिलरली तुम्हारा फ्रेंड ये बोलता है कि यार मैंने चालू तो किया है कुछ, थोड़ा टाइम मुझे सपोर्ट चाहिए. तो आई एम बोरोइंग दिस मनी, इतना इंटरेस्ट में, और मैं इतने टाइम में पे कर दूंगा. लेट्स से कि 1 साल मुझे दे दे, मैं 1 साल. लेट मी इलैबोरेट अ लिटिल बिट ऑन दैट कि दैट फ्रेंड, यू नो दैट फ्रेंड फॉर अ वेरी लॉन्ग टाइम, उसका स्टेबल इनकम रहा, वो पे कर देगा. तो प्रोबेबली यू विल से मिनिमम इंटरेस्ट रेट पे कर लेना, आई नो तू पे कर देगा 1 साल में. पर वही फ्रेंड, अगर यू नो दैट उसको जरूरत है, आई विल हेल्प दैट फ्रेंड, बट आई नो कि थोड़ा स्टेबिलिटी नहीं रहेगा. तो फॉर द रिस्क दैट यू आर टेकिंग, तो प्रोबेबली फॉर अ नॉर्मल फ्रेंड विच यू विल बी लाइक सेइंग के हाँ 6% इंटरेस्ट दे देना ठीक है, you will probably say like give me a 9% or a 10% because I know that I'm taking a risk by giving it to you. So debt is something lending, and lending on the risk profile. Now when we come to hybrid, what happens is that it's a mix of debt and equity.
Right. So
Okay.
equity
So
is basically you're a part of the business, right? And we are lending to the business.
right.
Right.
हाइब्रिड में एज ए कैटेगरी देयर इज इक्विटी एंड डेट, दोनों होता है. ठीक है. फंड मैनेजर थिंग्स के इंडिया का ग्रोथ रेट बहुत ही अच्छा लग रहा है अभी. मतलब ऑल बिजनेसेस आर डूइंग एक्सट्रीमली वेल. कंजम्पशन, मतलब लोग लोग खरीद रहे हैं चीजें, बाहर जा रहे हैं, एनवायरनमेंट बहुत अच्छा लग रहा है. तो विद इन द गिवन लिमिट डेट का, इक्विटी का पोर्शन बढ़ जाता है, राइट? बिकॉज यू आर सीइंग के बहुत ही पॉजिटिव आउटलुक है. It could be कि मतलब your long term story stays like that, but within that, जैसे बीच में कोविड आ गया तो थोड़ा सा slump हुआ. So at that point of time you will take a little कि अभी मैं बेच देता हूँ, मुझे बाद में better entry मिलेगा. This is when the portion of the debt in your portfolio slightly increases, saying that अभी because interest rate नीचे जाएंगे, business pump up करने के लिए, मतलब at the same point, if you have extra money, it's lying and doing nothing, you will, I might as well pump it in the economy to make businesses running. So at that time interest rates come down, so that benefits the investor, so you will increase the debt portion a bit on that side. So when an investor is investing in a hybrid fund, that investor is getting, they don't have to think कि मैं equity में डालूं या debt में. It is a solution कि you're getting best of the both, and the fund managers according to the call will tweak the portion of the debt and equity in the funds. So hybrid is a category जहाँ पे investor को सोचना नहीं है कि debt या equity करना, दोनों करना है. fund manager का call है, they are the experts. But
Right.
when you are talking about hybrids, aggressive hybrid या फिर balance advantage funds, those are kind of the funds
Those
which
are
would
BS.
take this as
Right.
well.
So what is, what's the importance of the funds construct and how does it sort of guide a person's investment choices? We know that now there are within mutual funds, like every mutual fund house has or every AMC has launched a lot of funds, right? So when as an investor the person is making a choice, like like you rightly said, it depends on the risk tolerance, etc. So how when a person is looking at this, how do you think is what should they look at, like when they're looking at a funds construct, what are the important things that an investor should sort of look at?
एक तो कैटेगराइजेशन की वजह से मतलब वो क्लैरिटी आ गई है कि तुम जो एसेट क्लास में इन्वेस्ट कर रहे हो, यू आर गोइंग टू गेट एंड विद इन दैट. नाउ एज अ फंड मैनेजर, मतलब हाउ डू यू सिलेक्ट, हाउ टू गो अबाउट इट कि व्हाट इज योर इन्वेस्टमेंट स्टाइल. अगर एज एन इन्वेस्टर तुम ये बोल रहे हो कि भाई मुझे तो क्वालिटी ही चाहिए, एंड आई वांट अ फंड मैनेजर जो मतलब वैल्यू बाइंग पे भी तो यू विल गो फॉर समवन हु इज ऑन द वैल्यू बाइंग. सिमिलरली तुम अगर तुम्हारा ये है कि यार रिटर्न इज माय मैक्सिमाइज, अगर डेट में ले लो कि तुम्हें रिस्क और रिटर्न हाई लेना है, तो प्रोबेबली यू विल गो फॉर अ क्रेडिट funds, like or that category जो fund manager ज़्यादा credit लेता है, और अगर you are like wealth perseverance is my prime most and I want to look at the interest rate outlook only and decide, so you can go with a fund manager who takes primarily interest rate decision, like outlook, and based on that portfolio management. Categorization by SEBI has already narrowed it down to the construct. स्टाइल ऑफ इन्वेस्टिंग डिपेंड्स ऑन के कैसे इन्वेस्टर आप हो, और आप कंजर्वेटिव हो, मोमेंटम, आपका इंटरेस्ट क्या है, तो आपका पोर्टफोलियो उस हिसाब से इट विल बिकम लाइक अ मिक्स ऑफ दैट काइंड ऑफ एसेट एलोकेशन.
Right. So also, like, in this case, like you said, a lot of risk is already outlined by the regulators, and, like the
Right.
sort of operates within that boundaries, right? That you can't go beyond, and there are always thresholds to which you can do, right? So it's also a very safe thing to do for investors, right? Like, mutual funds were created because there was a vacuum, and the indirect equities, there was a lot of, like, lack of safety, and people were, treating trading as their day jobs, and, that kind of a thing
Right.
was happening. And now that, all of that risk has been outsourced, and even the fund managers are operating within that. So, what, in your opinion, makes beyond these risk taking calls or risk holding calls, makes a very good or a very successful fund manager? What are the qualities that are required, you think, to be like, from your experience?
In today's date, we are living in a world of globalization. Even though a lot of chatter is there about deglobalization, the first thing in the morning that you see is the updates that are happening globally. So every day there is a lot of noise which is happening. As a fund manager, first and prime most that in today's date I feel is to navigate through all that noise. So you have to be able to differentiate between what is factfulness, what will actually turn into action, and what is the noise. Because if you don't do that, then you are probably changing your opinion every day. So one is that sail through the noise. Second, as a fund manager, you need to have a process of analyzing things and going in depth to understand. So analytical skill is something non-negotiable when you go into a fund management. And third is the temperament to, once you make that opinion, the temperament should be there to keep up with that decision, and keep, you have to obviously ask yourself every day that whether this is right or wrong. But at the beginning of the day and at the end of the day, you have to evaluate that, okay, the thought process that I have, and is it falling in line, the actions are falling in line, do I need to change, do I need to keep on the track? That is something that you have to ask every day, morning and evening, yourself as you see the developments. But most importantly, to be in this field for to succeed in it, there is one thing that you cannot be stubborn also. If you see the moment that you are going wrong, you should be able to owe it up, and you should be able to change your decision in the benefit of the investor.
Investor. So,
So
leave
these
us.
are few.
Yeah.
And so cut through the noise, analyze yourself every day, ask questions every day, and then be able to evaluate and change if that is what is needed.
Right.
So these are
Right.
few things that are needed to be as a
That's
fund manager.
interesting. So, Kruti, how much of a role does technology hold here? We know that internet is like so new, and there's a lot of information overload, like you rightly pointed out. So much noise, so much news, so much access to constant information, right? For example, you would have quarterly reports to companies if somebody was a fund manager 10 years back, and they'd go through all those papers physically. Right now, there's a lot of instant news, right? And a lot of instant information on the values, on the company financials also. Companies are releasing data faster and faster. So, as a fund manager, like how much of usage, for example, of technology are you making in terms of decision making? Or is it just a facilitator? Has it sort of increased the pace of your decision making? Or, it's the same and you're just like using it as an ally? Like, what is the role of technology or fast information in your everyday life?
So in terms of technology, we have come a long way ahead, and you like rightly pointed out that first there used to be annual reports which were given out, and there used to be page by page analysis that used to happen. In today's world, it is much faster that the results are out, and in 10 minutes analysis is done and given out on our mails to us. It definitely helps, and that is what we see in the markets also, whether it is debt or equity. We see an immediate impact of it because the numbers are immediately available and analysis is immediately available. Can technology help us, technology make decision for us? No, it doesn't make decision for us, because one of the primary thing that you have to understand about the market is markets don't move on the information which is out at that moment. Market essentially works on the anticipation of what the numbers are going to come. So the analysis that is pre the numbers that are going to come out, the market movements over there, technology enables us to do those analysis because a lot of the historic data's analysis comes out of that, and it enables us to do the decision making faster. So at this point of time, yes, technology and the decisions go well hand in hand. They enable us to make decisions, but they are not the decision makers, because again, when the numbers are out, we want to anticipate that what's going to happen next, and that's where the human intelligence is needed to tweak and do the inputs more so ever.
Right. Yeah. No, that makes sense because it can be a facilitator, but ultimately somebody has to take the call.
Right.
That I also want to understand just a little bit about the rise of algorithm trading and like to fund how a fund house is sort of dealing with that and like because we get a lot of questions from like will markets move to a completely automated sort of like algo trading kind of a situation, and we know the rise of these quant funds and this kind of stuff is happening. So one, like you rightly said, the decision making is clearly still with the humans. So how do you think that bit is evolving, and how, what to an average investor, what do we tell them that what is happening in that space?
See, again, there is a market for everything. Yesterday's what market was there and how the investors were behaving. Today, investors are not behaving in the same way. There is a difference in how the investors are also behaving, because there is obviously a rise of the risk appetite. There is more awareness. So yesterday, probably we saw parents' generation doing only FDs. Thereafter, we've seen that people have moved into equity also, and now is a youth which is more risk taking because they have more appetite. So
Hmm.
there will be a market for everything. Algorithms will also probably work, and they will give an output. There will be a fluctuation, but at the end of the day, it is about the investors interest and appetite, that what they think. If they think that they have enough risk appetite for algorithms, they will do it. But if they think that they want to depend on the human intelligence, because at the end of the thing, algorithm is also made out of the analysis that a human brain is putting it, right? It's the thesis what it's running on, the human brain is giving an output.
Right.
So there will be, I believe, upcoming times, there will be audience for everything. India is a growing market. We have a lot of youth, we have a lot of people who are in mid age, young age, and everywhere. There will be an appetite for everything, and there will be an investor. And the best examples would be probably in today's date, how much investors are in, investing in thematic funds, or they are investing more in the technological based funds. So there's a lot of traction which has picked up on those also these days, right?
Right.
So yes, I feel that there's going to be an investor.
For every category. That's interesting. So, there's also, speaking about technology and information, there's also a rise of like DIY investment platforms, right? So, do you think investors are sort of better equipped and, do you think there's an abundance of information because the choice overload is also overwhelming a lot of them from what we hear, right? And especially now that the market took a little bit of a, fall, that a lot of investors were coming and asking us, like, okay, we started with DIY, but now we're sort of lost, right? Because we started picking those funds with ourselves, but that was a lot for a lot of people. That was their first sort of like market down that they saw. Like younger people, especially, started during COVID. They got too excited by a very high bull run, So that kind of a thing. What do you think? Like, is like what? How are DIY platforms shaping this? Of course, it's also democratizing, right? Yeah.
So I would like to go a little bit back on these things and just explain it in a bit. DIY platforms are beautiful. and an economy should have it, obviously,
Right.
because it helps people participating or doing it.
Yeah.
But the issue with today's, Indian education, I would be more specific about, is that as a whole generation, we have not had any financial education as such. Unless and until you are in that industry, you gain the experience of what is what, a
Mm.
basic even a master's in any other field would not understand the basics of the finance, or as simple as tax saving or tax filing also. So
Mm.
that bit has been missing from our Indian education system. I hope it improves and we have more education over it in our initial primary school days, but that's an issue as of now. So the biggest problem with DIY is that for that you need to know the basics at least. Ke matlab, what am I investing into, what are the factors that I should be looking at. The primary factor that will be flashing on those platforms will be ke last 6 months performance aisa raha, but
Mm.
that is the mutual fund disclaimers itself say that the past performance is no indication of what is the future performance going to be,
Right.
because the future performance is on the assumptions of what is going to happen ahead, not what the past
That's
performance
the
shows.
problem.
One is that. Second is that as of now, the penetration into the mutual fund industry of investors is only not increased that much. I think as a whole percentage, I don't recall.
It's
Yeah,
3 to 4%. Yeah. Yeah.
exactly. So, matlab, when the awareness is not there around so much investing only, so
Mm.
DIY karna, becomes a little more difficult.
Difficult.
And the bull run that we had in last 2 years, investors got swayed away thinking that they are making the money.
Right.
But if in reality, if you see, यानी है कि मतलब, you are suddenly walking fast. It is because the escalator is making you walk faster, right? It is helping you. So
Right.
that enabled, and a lot of investors got swayed away in this bull run. There were a lot of, industry veterans which were saying that this is not something that is going to continue. Obviously, India as an economy is a growing economy and we are seeing a long-term growth. But a lot of people started thinking that they are experts because everything was just moving. I
Hmm.
think now that bit of the correction that has come in, it has hit them again that we need a little bit of advice and expertise on this, because whatever I touch is not going to turn into gold, which used to be the case.
Right. Right.
So that's where a little bit of a knowledge gap is there, and getting swayed away this event has
Right.
happened.
You also mentioned about, how parents' generation invested a lot in safe assets. Like, I think my family's been investing a lot in real estate. It's been very scared of capital markets because, in 1993 when liberalization happened, I think suddenly it was a lot of like misguided blind, like, bets, right? Everybody was just treating it
Right.
like not as a business, but more like, a betting sort of a sphere. And it's more organized now. So, a lot of people's even professional safe choice has been like FD has been a very traditional choice, in so many Indian households, right? And again, we're seeing a rise in companies that are, giving technology to now FD, like, from multiple banks, there are platforms where you can do that, right? So, I mean, how has mutual funds sort of performed in comparison? And we are seeing definitely, like you said, it's not enough penetration, but it's still increased, right? There's conversation
Right.
started at least. Like everybody's talking about equities, everybody's talking about capital markets. So how, how much of a like how to in post-tax returns, for example, how do mutual funds perform in a comparison to say, let's say a simple asset class like FD?
So, if you see over a long period of time, equity obviously has performed because there has been an average return of 12 to 15% over the period of time in equities. So, compared to that, probably your fixed deposits would have yielded 7%, or if you have taken a higher risk, and like probably 8.5%, depending on that. So, there where you're talking about an asset wealth creation, equity plays a better role over the period of time.
Hmm.
Now, if we are talking about a perseverance of wealth, if you are someone who does not want to participate in market, but you want your money to be on the safer side, fixed deposit has been essentially like a first instrument that has been preferred by the investor. But if you see over a long period of time, okay, if you're putting money in FD, there are two things to it. One is that you get taxed on fixed deposit every year.
Hmm.
Your whatever tax slab rate is there, that is going to be taxed every year. And second is that in FD, every year you get a return post tax. So your 7% which is there, then that will come up to like 6.5% essentially.
Hmm.
But in mutual funds, in fixed income mutual funds, what happens is that until you don't withdraw, you don't get taxed.
Hmm.
So if you are investing in a mutual fund with a coupon of around, say, like a 7.5%, and you're not withdrawing, every year that 7.5% is getting reinvested to
Right.
increase that much, right? And you will only get taxed at the redemption. So you are getting an accrual benefit and you're not getting taxed every year. And the study says that because of this, over a period of time, it makes a difference of 1.5%. So imagine over a long period of time, if you are doing FD versus if you are doing a fixed income fund, you're on a larger quantum, that 1.5% makes a lot of difference, right? And if
Right.
you are talking, and I'm not talking about market gains over here, market gains
Right.
are separate. So if
Right.
you play that cycle, then it is entirely different.
We're talking about a purely safe fixed income mutual fund versus right, like versus
Yeah.
fixed deposits. Right.
Right. So, I mean, this is what something that investors are not yet, aware of or not understanding, or there needs to be a more education around it. But definitely it gains to be in the mutual fund. And plus easy liquidity. Fixed deposit, you have a break rate. For fixed income mutual fund, you can, be in and out of a mutual fund anytime you want without any questions asked at any point of time.
Right. And also products like credit against investment now, right? Like, Mirae also has something where you can take a credit against securities. So even if you don't want,
Yeah.
even if you want access to quick credit, that also is being made sure by markets.
Yeah, there are various ways which are like, it's facilitating, because now there is an availability that against your mutual fund units also you can take a borrowing. You don't need to like break your investments for that.
Right. Also, another question is, do you think patience is a very important skill that a fund manager should have? Like having some sort of like calm, dim attitude, because when you think of a fund manager and when you watch a lot of these films and, watch people who are doing a lot of risk holding, they are usually shown to be like, being impulsive. On the other hand, whenever I meet fund managers, they're actually pretty like patient people and, like they have to have a steady head, they have to think ahead, they have to like be relaxed. So how important do you think is patience in your life and in like your other fellow fund managers life?
So all the fund managers that I have come through and like I have spoken about, yes, during our actions we might be aggressive, but like I mentioned right in the beginning, that there is a lot of noise these days because there is a lot of data, there is a lot of news that is available. We need to keep that calm head and think through things before taking any decision. Because obviously, one, it is investors money, it is not our money, we do that with a great responsibility. And second, obviously the regulators ensure that everything that we do is in a disciplined way, in a reasoned way. So we, yes, contrary, I don't know, like contrary to shown or displayed, very level headed patient people who think through the every decision that they make, and analyze very critically what to do next, is one of the traits that would you would learn with the time being in this occupation, I would say, essentially.
How lovely. Right. So, one more thing that, we get a lot is how are the fund managers sort of, because they're managing a large amount of money, right? So, one, we've established that they operate within some risk capacity, there are thresholds. Do they also have some liberties in terms of like, when they're picking stocks, etc.? Do like, is there, what is the decision making ambit, and like how much can you stretch like within, like for example with each other or with the other seniors? Like, do you take collective calls or do you take a lot of individual calls, or how does that work?
Let me just put it this way, it is always a team effort. It's never an individual in itself who is functioning. for good or bad, the fund manager is highlighted for the performance of the fund. But whenever we are making a decision, there is the entire team that is, required to enable that decision, right from the CIO to the fund manager to the analyst, because analyst is giving a recommendation, right? So as a fund manager, I might take a call to do it or not do, but I can get a lot swayed by what the analyst is showing to me. My execution depends on, how it is executed at the levels that I want to. In any mutual fund, any organization that you go, it will never be a function of a fund manager. It will be a function of a team, and the actions that are taken or the output that is there, it is a collective effort. In our vicinity also, whenever we are starting or ending the day, we are always discussing that this is what we think, this is how the things would be going. We might have opinions, we might have, debates, or we might have a difference in this thing, but we conclude together that what should be done. So less of individual, more and more of teamwork that reflects the output of, the performance of the mutual fund or any
I
scheme that
also
is
want
there.
to tell the listeners that, they are not also, they don't use their mobile phones. They're very disciplined about the way they, so like you said, they're very responsible with the way they're handling the money, because
Yeah.
at the end of the day, it's an institution which is handling a large amount of money, right? So, but that's great. So, thank you so much for your valuable insights, Kruti. There is one last thing like that we want to sort of bother you with, which is that, if there are any first time investors, if there are any women especially, who are hesitant investors, or but they want to start, so but there's some hesitance there, and what would your tip be, like, in terms of like when to start, how to start, or like if they should, like, anything at all that you want to sort of tell our listeners for first time investors?
First of, so irrespective of a man or a woman, there should not be hesitancy in investing. Each one should invest, and women more so ever, because the financial freedom has become very important in today's date. Age, no criteria. You become a teenager, you invest. In today's date, I have seen a lot of people gifting mutual fund units rather than gifting, gold, or like, gold chain or something like that to the infants. So the investing is becoming a very primary thing. Age is no bar. You start investing, you start understanding early on. You might make some mistakes, but you learn out of those mistakes. All of us do. That's how we learn. So there is, you become a teenager, you start participating. You might make a few mistakes here and there. That is acceptable. There's a small amounts you can do it, but start investing early. When you are younger, you can take more risk. You can look at the products, like you said, DIY was something that people tried on. If they are young and they have a risk appetite, they will learn from that. Probably, there are more factors to look at than the performance, or there are more ratios that are there which are to be looked at. Probably they'll start looking at that in future, but one should start investing very early. For women especially, now that financial freedom is the foremost, there is more participation which is coming in. So somewhere I was reading that in India, around 18% of the GDP is contributed by women. And there are, around, I think 30% of the women still working. We have to come a long way from there, and the participation to increase. And there was some study by UNESCO which said that, women outlive men.
Yeah.
Yeah, so they,
They need to
it
save up
becomes
for
even need to save up for a longer period of time. So
Right.
it might sound good or bad or whatever there, but we need to start planning for ourselves, and an early planning always helps, because there is a factor of compounding that comes in. The earlier that you start investing as an individual, the smaller quantums, you have a longer time for them to compound. But if you start investing late, then you have to put a bigger quantum for your final retirement, the lifestyle that you want to continue. So the power of compounding is very important that an investor needs to understand. Earlier, the better, irrespective of a man or a woman, or anything, they should just invest. Start small, but do start.
Right. And what about women in the financial space? Do you think there has been a huge increase? Like you are in the fund management space and you're also seeing other women. So do you think there the participation levels have upped? Do you think more women are now in the banking and finance industry compared to, the past? We're also seeing like a lot of fund houses now being managed, like in CIO positions also seeing women come up. And that's sort of inspiring for a lot of young women who are starting their careers even in finance, right? So of course, like you said, regardless of the gender, one should like keep going. But it's also relatable to be able to sometimes see that somebody else is able to do it, right? So how has
Mm.
that been for you and for your fellows?
So, uh, our industry is a knowledge-based industry, okay? So anyone who has the knowledge, who has the curiosity to, learn, keep learning, and has the temperament will find an opportunity. There is no barriers, irrespective of a gender, there is always a welcomeness which is there in this industry. The hesitancy has not been from the industry accepting. I think the hesitancy has been from women not taking up these careers as an option, probably because lack of understanding, or thinking that there would be stress or number of hours that would be going into these professions. But
Yeah.
that has changed, that has been changing. The landscape of the
Mm.
Indian families is changing, I believe.
For
Right
sure.
now the families are much more supportive, so we are seeing many more women coming into these industry, taking the management roles, taking the higher up roles. It's been a progressive, society, and we've seen that the progress has been there in the industry. Are we there where we should be? Probably not yet,
Mm.
but it's good to see that the change is there. And I was reading somewhere, just like Amphi had just released, that around in mutual fund, the contribution of women has been around 35% or 40%, which is there.
Right.
So that much of the investing is coming from women. So from an investor perspective also, women are getting more aware and they're investing more. So
Definitely.
as a society, we are seeing that change. And any society anywhere
Mm.
like is a reflection of how women progresses in a
In
society,
the
right?
society, and that
So
also translates into the investor sentiment. Your
right, investor sentiment and as a growth of the country. So
country.
any country that you see
Mm.
is, the it's the derivation of how the woman progresses in that society, because at the end of the day she is the champion of the home, and she is, champion of how
Yeah.
the things are shaping out in the society, also how they are treated.
Mm.
So we are seeing the change in landscape.
Right.
A little longer to go, but good to see that change.
But what was interesting was one of the Amphi reports also said that women from Northeast are some 30% of this was Northeastern women are investors, which was a very interesting number for me. The demographic clearly shows that wherever there are matriarchal societies or wherever there is like real life social change, then it also translates into their behavior everywhere, whether it's women stepping up in these professions or as investors, or I think, right, that as a society progresses, so will be the
Absolutely.
value. True. I right.
Mm.
Thank you so much, Shruti. This was so informative, and for all our investors. And if you have any questions, like please write to us, and maybe we can do another session sometime. And so anything that you want to ask about a fund, about how they run, and thank you so much for taking out time on your like on a weekend, to speak to us and to give our listeners an understanding of how a mutual fund works. And so good to see more and more women in decision making roles, and very important decision making roles. Here is a woman who's managing a huge amount of money and taking big decisions and calls and with the team. So thanks a lot, Kruti. Thank you so much for taking out the time to explain everything to us.
Thank you, Sneha. Thank you for having me. Happy to be with you.
Thank you.